welcome to the part 2 of the order blocks strategy. So where we'll talk about the order block refinement, when and why we need to do refinement, and how we'll do refinement. Okay, so by now you already know what is an order block and how to identify those order block in the market, right? So if you don't know what is an order block, please go back to my first video and come back here again for the refinement. Okay, without further ado, let's get started. So order block refinement. So why we need to refine order block? Okay, so in order to get highest possible reward compared to the risk, we need to refine those order block, right? So for example, let's say this order block, okay, this one. So if we see, it's kind of a 50 pips range, right? So in order to reduce that 50 pips range, we need to refine those, so that we'll have the smallest stop possible and biggest reward, right? So okay, so this is why we need to refine the order block. Okay, so we need to get a smallest possible stop and highest possible reward. So for me, the stop should be less than 5 pips. If it is more, then we need to refine the order block. Okay, so that's my criteria. So you need to do for 10 pips, 15 pips, whatever, like you are comfortable with. Okay, but for me, it's a stop needs to be a less than 5 pip or 5 pip. If it is more, then I will refine the order block. Okay, so that is about why and when to refine order block. Now we'll see how we refine order block. Okay, so these order blocks. Okay, so I identified for this this kind of example: Australia dollar and Japanese yen. Okay, you can use any chart, any market, stock market, forex market. The concepts are same. Okay, right? So let's say, for example, this is a big order block. If you see the range, it's kind of a 56 pips. So we want to make it less than 5 pips. Okay, and want to catch this move. Okay, so remember, what is an order block? Order block is in this case, a bullish candle before big bearish impulse. This is bearish impulse which breaks the structure. Okay, that's the important, which breaks the structure. Otherwise this is not an order block. Okay, so for example, this is an order block on higher time frame, but on this time frame, it is not an order block because it didn't break the structure. It just stopped here and then come back. Okay, so this is an order block which break the structure. So this is more important for us in order to get involved in the market. Okay, right. Now so in order to refine, let's go to you need to go to the lower time frame and find it out, where is the last bullish candle which broke the structure. Okay, let's go on 4 hour and see. Okay, so what do you see? I see. Okay, so this is the last candle, bullish candle, and then more happen again. Okay, so let's go to the 1 hour. Where was we? Okay, well, was it this one? Yeah, so if you go here, so this is an order block as well, but look, this didn't break structure, it just stopped here. But for us, in order to get involved in the market, so this is an order block, the bullish candle. Okay, and then that broke the structure. All right, so it is already now reduced to how many pips? Come on. So less than 20 pips. So we came from 50 pips to 26 pip. We can go further down. Let's go 45 minute. And we see here, this was the last bullish candle, and that's it. So market will come back here and then fall. Okay, so that is how you refine. Okay, and this is the, like, let's say 13 pips or whatever, like, 8 pips. You can place the order here, sell order, like this one. The stops will be above that order block. See, 13 hour. Sorry, we can a little bit more. So 17 or 18 hours. So 18% profit, 18% is reward and 1% risk. It's kind of, it works like that. Okay, so we'll talk about entries later. Okay, so this is there will be two kind of entries: risk entries and the confirmation entries. We'll talk about that in the coming videos, but just for this video, you should know how to refine order block and when to refine order block. So if the order block is too big, like 4-hour or daily order block, which is like 50 pips range, so you go to the 1 hour, and refine. Don't go below 1 hour, because the lower you go, it doesn't hold up, so the structure and the stuff. So I would say stick to the 1 hour, and if it is more, it's about 10 pip range of that order block, then you will be fine. Okay, so this is for this example. For, let's say, for next, how do we do that for this order block? Let's say, right, so this is the last bullish candle which broke the structure. Okay, so market come back here and then react. See how powerful this concept looks. So so in order to refine this one, okay, you need to go, let's say, one hour, and we'll find it out. Last bullish candle which broke the structure. Okay, so you'll say this one, right? Some may argue, okay, why not this one? Okay, this is also true. This is an order block which is unmitigated. It's didn't tap and come back. Okay, so you can have two order block. In this case, you have two order blocks and market reacted on the first. Okay, it's okay, you missed the trade. You need to make a solid rule. Okay, let's say, for example, I will only consider the order block which is extreme, the last point. Otherwise I will not get involved in the market. Make a plan like that, it will work. Okay, sometimes it will go from the first and you will not be on the trade. That's okay. Okay, that's perfectly fine. But just, that's part of your trading plan and the rule, so you can make it out how it works for you. But this is how you refine to order block, and market will come back here, and then we'll talk about entries later, and you can enter from here and then take it to the next break of structure. Okay, so this is basically about order block refinement. If you have any questions or anything which is not understood, let me know in the comment, and please smash the subscribe button if you like this content. Okay, see you again. Take care. Bye.